Could you be planning your next purchase and effectively committing mortgage fraud without even knowing it? Let's talk about it. I'm Andrew Gavin. I'm a licensed mortgage lender. I cover all of California and I sell real estate here in San Diego. Mortgage fraud is on the rise. Occupancy fraud is the number one type of mortgage fraud, and it's getting worse and worse all the time. So there's some situations here that I think many people would not realize that they are committing fraud. And when you purchase a house, you have a real estate transaction between the buyer and seller, and then you have a mortgage transaction between the buyer and the lender of the money. The mortgage and that whole contract and all those documents are very detailed and specific, and they have their own guidelines. Buying the house is very similar to that, using California documents, and it's very disclosure heavy, trying to be as transparent as possible, where the mortgage is more specific to binding the buyer to the lender and ensuring that the property is the collateral for this borrowed money. So it's a much bigger commitment to the mortgage company because it's potentially for 15 or 30 years. So mortgage fraud. The main thing that happens with mortgage fraud is the lenders don't want to lose money based on misinformation. And misinformation given by a buyer to a lender is what mortgage fraud is. So let's talk about it. Number 5 is what's called nominee fraud. This is when you're buying for someone else. Here's an example. You purchase a home in your own name, but you're planning to let a friend or a relative live there that has bad credit or financially couldn't qualify to get a loan themselves to purchase this house. So you've essentially told a lender that you're buying a house for yourself and you're going to let a friend or relative live there. Maybe they're going to pay you rent. Maybe they're just going to pay the mortgage itself. That actually doesn't matter in this scenario. It's the fact that you claimed you were the buyer and you were never planning to live there. What are the consequences for this? You could have the loan term called due immediately, meaning as soon as they figure this out, basically they call the full amount due and you have to repay that. You could have criminal fraud charges against you, and you could have credit consequences as well, where you could potentially get blacklisted. Here's the thing. If this happened and they called the note due, you couldn't just go and get a new mortgage because you're being blacklisted by these guys. The next underwriter is going to find out about this and ask what's going on. And they're not going to issue you a loan to cover this because you defrauded this company. That's a major consequence of mortgage fraud. Number 4 is buying a rental property but claiming it as a second home. So there's 3 types of properties you might buy: a primary residence, a second home, or an investment or rental property. A primary residence is always going to have the best interest rate because the lender always figures that of the 3, the lowest risk to them is the home that you're living in, the primary residence. If you owned a second home or rental and you had financial problems, it's more likely that you're going to skip paying one of those 2 mortgages and you're going to continue paying your primary where you live. That's why the rate is a little bit better. So you don't want to use this tactic to get a slightly better interest rate and being able to use a smaller down payment on the purchase. If you're going to buy a rental property, get a investment type of loan. It's the best thing you can do. Ideally, use a DSCR loan, which would help you in the long run because you're going to use the potential rents from that property as income to qualify. The consequences for this type of mortgage fraud, there is potential fines and penalties. There could be legal action for the misrepresentation, and they could retroactively reclassify your loan. So if they needed to change the rate or require a different down payment, for you to get from whatever information you shared with them to the correct information to be an investment property, the qualifying interest rate at that time, and the requirement for a rental property down payment would be what they potentially ask of you. So number 3 is stating when you're going to move in, but never moving into the new purchase. In a purchase contract, you usually have like a 30 or 60-day escrow. The loan that you get when you're purchasing, especially for a primary residence, in that documentation, it's going to say you have to move in within 59 or 60 days after the closing of the purchase. And you're meant to live there for 12 months before renting it out or moving to another property. So you're giving a commitment to them that you're going to be there for 12 months and that you're going to move in within about 2 months. Now, the fraud is if you never move in. And you turn around and you put it up for rent, or you just don't move in and you stay where you're at. The reason that happens is if you don't move in that 60 days, this goes from a primary residence purchase to at least a secondary home, and it potentially becomes an investment rental property, because why would you buy a house and then just let it sit empty? Maybe you're letting a family or a friend live there. I don't know. But if you buy it as a primary and you don't move in within 60 days, you will be, in the mortgage lender's eyes, you're committing fraud. The consequences are breach of mortgage agreement. You could have the loan accelerated to immediately due, and you could have potential federal investigations into the fraud and have legal actions against you. You could also be blacklisted for mortgages on your credit. Number 2 is using a family member as a straw occupant. So the idea here is a parent is buying a home claiming that one of their adult children are going to live there, but instead they turn around and rent it out. So they essentially claim it as a primary residence because family is going to live there. They get the better rate, and then they turn around and rent it out. So this is one of the more common types of fraud. Now, I've helped families buy properties that they rented to their kid, and on the refi, we added in the kid as a primary resident because he'd already lived there for 2 years and was going to continue living there. We went from a investment property interest rate to a primary interest rate on the refi, and he still lives there. In that particular situation, the mom and dad were actually hoping that he could take over the whole process. Now, what's interesting with that scenario that I don't understand is if they avoided the tax implications. I believe they would have, because a primary member of their family is now living in the property, which essentially turns it back from a rental property into a primary residence. They're not showing the rent payment on their taxes. So now they end up not having to pay the same capital gains if they sold that property. But I'm not positive on that. That's a good question to ask an accountant. So consequences for this type of fraud could be legal liability, legal actions. The terms of the loan could be called due, and there could be potential for foreclosure. Ideally, I always believe that these mortgage companies, what they truly want is to earn the money that they were supposed to based on the real accurate scenario that they uncover. The misleading information is generally getting the loaned money at a much less expensive cost to the buyer, and the mortgage company wants the amount of profit that they should have got for that amount of money for the specific and accurate type of mortgage that it's actually being used for. So the number one type of mortgage occupancy fraud is when someone buys a primary residence, never moves in, and immediately turns around and rents it out. Now, this particular type of mortgage fraud is in the news right now. There's a senator and there's a attorney general, both being accused of mortgage fraud for purchasing properties as primary residence, and they never lived there. Both of these people lived in the states that they were representing in their political positions, and they both purchased homes in different states and applying for mortgages for those properties as the new property being the primary residence. This is exactly what this is. So they never lived there. They legally couldn't have their political jobs and have a primary residence in another state. So it's impossible for them to probably get out of being caught for this. And most likely what they're doing is they turned around and rented it. Because no one, like I said, doesn't make any sense to just buy a property and leave it vacant. The type of consequences for that type of fraud could be that the loan is called due immediately. There could be fraud charges brought against you. There could be fines. They could potentially foreclose on the property. And they could be blacklisted by vendors on credit reports. Because the mortgage industry sticks together in the way that if you defraud one lender, that lender is going to let everybody know that you are not an honest borrower. And because it costs all these lenders a lot of money when they have to deal with mortgage fraud. So they're not going to just let you get away with this and keep it private. You're going to get blacklisted, which could be the very worst thing that you want, especially if you were doing one of these types of things to help a friend or a family, or potentially create a type of income from property like short-term rentals or something. It's going to be best to listen to your mortgage advisor, who is probably going to suggest you do X, Y, and Z. And you might even run across someone that says they can't work with you on that because they know too much about what you're really planning to do. So you don't want to get blacklisted, because it's going to affect the chances of you getting a future mortgage for your next investment, your next primary residence. And you just don't want that to happen, to save a few dollars by securing a slightly better interest rate. If you have questions about mortgage fraud, any of these scenarios, you're concerned that something weird is going on, I'm happy to discuss anything with you. And if I can help, I'd love to do that. Talk to you soon.